Okay, great. Let's get started. You should be able to see my screen and hear the sound okay. Thanks for coming, everybody. So what we're going to do today is just go through the markets and really identify some trading opportunities based on the concepts that we often talk about here when I lead sessions. We'll look at some of the opportunities that we set up last time and move forward. We've hit some big turning points in the last couple days. Hopefully everyone's been had some great trading. All right. Okay. Let's take a look. Let's start with the U.S. dollar over here. Okay. This is a level that we went over. I'll really blow this chart up just a second. Okay. This is a level that we went over last time. A really neat demand level. Prices have just turned from that level and are trading significantly higher at the moment. You should be able to see the dollar screen okay. Can everybody see that all right? Hey, Squiggly Line, how you doing? All right. Everybody see that dollar chart? Okay, great. So the area where we'd expect this rally to start slowing down is right up in here, okay, which is kind of getting there now. All right. But take a look at this demand level over here to the left. It's a little level highlighted in yellow, okay? Now, you might say, well, all these areas on the chart, why focus on that one? Well, remember, one of the key things that we talk about is when identifying really key and solid supply and demand levels where we look for prices to turn, okay? Remember, if you're going to get your most significant turns in price at price levels where supply and demand are most out of balance, okay? The picture that represents that on a chart is never going to be many candles. It's going to be very few candles, okay? So we want to focus on the little tiny levels that you find on the chart, not the big ones, okay? The reason for that is because, you know, the more supply and demand is out of balance at a price level, the less trading activity you're going to get. So that's why we focus on that one. And of course, if you look to the right now, you see that prices just touched that level and turned higher. So even if prices come back down to that level anytime soon, you know, we'd probably expect another little bounce from that level because prices barely touched this level and turned. Again, that's kind of tipping us off to the fact that it's a pretty good level. All right, so that's the dollar. Now let's look at some currencies against the dollar, and we can start with the euro. Okay, so the rest of these charts you see on here are the euro. Okay, if we go to the daily, I'm sure most of you have. How many had this one on the daily? How many took this opportunity on the daily, this supply level? We looked at this one last time. Anybody trade this level? Okay, let me. Yeah, now they're not usually this clean and clear and easy. I don't want to make trading seem easy. So if you took this one, if you're new to trading, you know, this is a great level, but you know, you don't get these levels all the time. So, but the fact that the dollar came into that demand level at the same time this euro is trading up into supply, you know, that's a trade that comes up, you know, once in a while. So, nice job there. But this is likely to start slowing down as well, right, you know, pretty close to this area, coming down into a little cluster of activity here that was kind of kind of a launching pad, not too long ago. Not a big deal, all right. But again, that trade happened. So now what do? We've had a big turn in price in this market. So where's the next trade likely to come from? Well, I want to bring you over to a smaller time frame chart here. Give me just a second. And I'll bring the chart up for you. Okay, so this is a short-term trading opportunity. Okay. So I'm going to take you over to a black chart. Can everybody see this chart? Sorry for the different colors. But so given that we had a pretty big turn, okay, now we've got a nice little couple-day downtrend going on. All right. Let's take a look at this 138.50 area. All right. This is a short-term trading opportunity. I can tell you that I'm definitely going to take as long as I'm around the computer. But this is a short-term trading opportunity. Maybe this will hit during our session. I don't know that it will, but we'll see. Okay, I'm going to put some lines in this area. Actually, let me highlight it first. Okay, I'm actually going to go all the way up to here. Give me 1 minute here, and I'll put these lines in. We'll share it with you. Okay. And let me capture the screen again. There you go. So 138.50, 50.52 there to about the 138.90 area. Okay, that's the supply level on the chart. This is just a day trade. Okay, small time frame chart. And by the way, you're looking at the Euro futures now. So we were looking at the spot. This is a chart of the Euro futures. So if this trade hits and comes up, I will take it in the Euro futures, not the spot. So, okay. And I'd be looking for 2 to 1 to the first target, and then I'll move the stop to break even. And then I'd be looking for a further move to probably 3 to 1. All right. Okay. Now you probably are only going to need to risk. I said 50, about 52 to 90. You're probably okay going about 50, 52 to 80. Okay, but if you want to make it a little safer, you might want to add a little bit to the stop. You probably won't need to. That would be my guess. Okay. All right. And if I scrunch this chart up, I'll show you where the targets kind of come from. Let me just go to a bigger time frame. It'll be easier to show you that. Okay, so take a look here, and hopefully you'll be able to see me pointing to this chart. So now I've just increased this to a 30-minute chart. Okay, can you see my mouse moving around if I'm moving it? So right now we've come down to this prior low from the 12th of October. Okay? And we've really taken out that area, which means there's really no demand left there. So where's the next stopping point in price? In other words, where's our next, where would our first target be for that trade if it meets entry? Again, you can make it wherever you want. For me, according to the rules, I would put target 1 right there, and I'll recapture this for you in just a second. Just get the lines in for you. And target 2 right there, so let me capture the chart. There you go. So those white lines, just be careful because those white lines are not meant to represent a zone. Those white lines are meant to be targets 1 and 2. Okay? So I'd be looking to sell short on a rally back up to that 38.50 area for a move back down to 37, say 20 to 25-ish area, and then perhaps a further decline to about 36.70. Does that make sense? Again, the market has turned at a larger time frame supply level. So now prices are falling. That's like the best time to go search for new smaller time frame supply levels to short against. Okay. All right. I just took almost the same trade, like literally seconds before this session started in the S&P. Still in a little bit of it. Okay. The trade is almost identical. All right. Why not sell now? Because we'd be selling after a really big drop in price. Okay, we don't want to do that, right? Okay. And let me read back. And here you go. Let me just read back. I don't want to miss too much. Would a rally not create a new, fresh demand level? It might, James, but not likely because there's not a lot to trade through on the way up. There's kind of just a drop in price there. So, yeah, Kurt, if you don't get the long trade, we'd probably look to be buyers down near the bottom demand, down near the bottom white line, right around 136.50, 136.60. Okay. Okay. And yeah, we'll look at Aussie. We'll look at the Aussie in just a little bit. Okay. You could sell from the 39 area, Peter. Sure, that'd be a great area. I'm just saying you're going to hit this 38.50 area first, and you're likely to get a drop from there. Okay. Let's see, SW1, if you know price is going down, why is it important to keep your stop loss close to the entry? Because nobody knows for sure that a trade is going to work. Okay, you never know for sure. If you're doing this right, the majority should, but even so, the whole thing with trading is there's always going to be one of four outcomes. Small loss, big loss, small win, big win. If you just eliminate the big loss, you can live with the other three, and that's trading. Okay? As long as you're okay with living with the other three, you can do pretty well in this business. All right? So that's a short-term trade I would set up in, I'm going to set up in a euro. All right? And, all right, let's move on. So hopefully that was helpful. That's a short-term trade, by the way. Let's go back to the spot market. Let's go back to some of the other markets here. Okay, that's the euro. That's really the only thing I see at this point in the euro. I mean, if we rally back up to that larger time frame supply level, eventually, we'll look to get short again up there, but that could be a ways off. So let's move on. And let's go to the Aussie dollar. Now the Aussie, ever since I've been doing things with FX Street for a long, long time, and the Aussie's been the one market where we've been trading off that monthly level for literally 2 years and doing very well with it. But now, we've gone through that level, but now we've got some great levels just above to trade off of here. Let's go to the chart. Okay, so let me grab the chart for you. Okay. So you should be able to see the chart of Aussie dollar. Let's specifically focus on, we can start with the daily, but we're just going to focus on these highs here. Okay. If we come down to smaller time frames, all right, we've got a couple areas of interest. Okay. And let me blow up this 30-minute chart here. Just a second, I'll set it up for you. Okay, here we go. All right, so there's the 30-minute chart. Let's just blow this up. Okay. There we go. Let me put some lines in there. And hopefully something will meet entry during our session. It's tough sometimes because these are kind of short sessions. Remember, we do a lot of this in the XLT. If you ever want to take this stuff further, you can always join me in the XLT. But we'll try to give you as much as we can do here. Okay, there you go. So that's the level we look to sell short against. Couple reasons. Number one, look at how prices declined away from the level. That big red candle where prices collapse. The message there to us, the reason why that happens is because typically that's telling us supply greatly exceeds demand at the origin of that drop. Number two, on the larger time frame curve, when you look at the weekly, monthly, daily, any big time frame you look at, this thing is way out there on the curve. And then you have levels on top of levels. Okay, so there's levels right on top of this. So all those things, and also the fact that we didn't spend too much time in the level. Okay, there's not like 10, 20 candles on this time frame. There's only a few. All those things suggest that supply greatly exceeds demand up there. Okay. The second part of this is, if prices rally back up to this area, okay, right there, I'll just put a circle in there so you have a reference point. If prices rally back up into this area, we want to be a seller because think about, for those of you that are new to FX Street, think about who the buyer would be here. Okay? Think about the buyer in that circled area if and when prices get back up to that level. And I would say they always come back to these levels. But think about the buyer. The buyer would be making two mistakes that every consistent losing trader makes. Okay? They'd be buying after a rally in price, mistake number one. And they'd be buying into a price level where supply exceeds demand, mistake number two. The laws of supply and demand guarantee that you are going to lose consistently if you take those actions. Therefore, we want to be the seller to that buyer. Okay? All right. So that's another one we would set up. Now this one, because it's so high up on the curve, I would not treat this as a day trade. You'd probably be better off treating this as a longer-term swing trade. Okay. SW1, there's quite a few. A week like this when the markets hit a lot of the markets hit big turning points. There's a lot of trades done in the XLT. It all depends on the markets, really. There's always trades taken in the XLT in a week, but the number varies depending on the opportunities. Okay. Kevin G., good question. How long does it take for price to revisit a level? Well, the answer really is take a look at the decline in price here. Okay. When prices rally up from wherever they're going to rally from, there is actually a level to the left of here. We'll look at it in a minute. And they get to this, 9,800 area in here. They're probably going to stall out a little bit. There's some supply right here. Okay. But then after that, there's nothing to stop price from moving through these big red candles. Okay. So that's how you judge time. Price typically moves just as fast through those big red candles, as it took to drop. Okay. But we do have this little area right in here that I'm pointing to. So that would cause prices to stall out. Okay. All right. And on the buy side, I wouldn't really look at a buying opportunity here. It's just this market's too high up on the curve at this point to consider buying. There are certainly areas to buy, but we want to look much lower. Okay. Let me just take a quick glance at this larger time frame. So, yeah, we probably wouldn't want to be buyers until about the 9,500 area. Okay. And we're not there yet, but in this area here, I'll circle it. I don't want to spend too much time planning this one out because prices are just pretty far from the area. But in that circled area is where we'd look to be, buyers. We want prices to move down on the curve. We want to get far away from these upper supply levels. Okay. Okay. All right, let's move on. And let's take a look at, there's a great level in the British pound. I mean, our kind of pick of the week in Online Trading Academy was the British pound, but it was a supply level, and we barely missed it. We missed it by less than 10 ticks. So let's go over to the Japanese yen. Not a ton to talk about here either. We'll see. This is kind of still in this area. Let me capture the chart for you. And let me just look back to make sure I don't miss too many questions. Yeah, so I see your Bollinger Band question there. Okay. Yeah, the way that that I kind of use the Bollinger Bands and we use them in Online Trading Academy is, when prices pierce the upper or lower Bollinger Band and are also into a supply or demand level, and in the context of a trend, that's where we use them. Okay, that's a pretty solid entry if you can picture that. So think that you're in a downtrend. You're in a downtrend, and all of a sudden you get a rally. Price pierces the upper band and it goes into a supply level. That's the short entry you're looking for, right? Because someone is buying after an extreme rally in price in the context of a downtrend and into a supply level, right? You're better off being the seller. See what I'm saying? Okay. Does that make sense? Okay, good. Let me just read back. Yeah, so Wilson, could you please explain your profit targets like T1? Yeah, so what you can do often, if you're, this is probably the most important thing with profit targets. If I want opportunities that are going to pay me, say, 3-to-1, okay, then I'm going to look for opportunities where the chart is offering me 4-to-1, right? So if I'm looking for, if I'm looking for 3-to-1, payouts, opportunities, I'm going to look for opportunities on the chart that offer me 4-to-1, right? If I'm interested in 2-to-1 opportunities, then I'm going to look for opportunities on the chart that offer me 3-to-1. Okay, right? Yeah. So a couple of questions on trend there. Okay. We certainly want to be trading with the trend. Okay. The only thing I would add to that is, if you're going to be successful at this, you're going to need to be getting into the trend before everybody else sees the trend, before the trend is well underway. Okay, when the risk is low and the reward is high. All right. So, and I'm answering a couple of those trend questions I see there. So what I'm getting at is every uptrend ends at a larger time frame supply level. Okay, and which means every downtrend begins at a larger time frame supply level. So like the euro, there was nothing wrong with buying pullbacks into that big rally we had. But once price reached a larger time frame supply level, that trend is likely to be over and the downtrend is likely to begin. So why not sell short there, or at least start to position yourself on the sell side? Okay, because by the time you get conventional lower highs and lower lows or downsloping moving averages, price has to fall so much for that to happen, you're always going to be very, very late in the trend. And you're just going to be paying people that got in before you. Okay? You know that picture of higher highs and higher lows, for example, in an uptrend that everybody looks for? It's in all the textbooks that everybody waits for, and then they buy? Well, to get that picture, a lot of people have to buy already, right? So why does it always have to be somebody else? Why can't it be you? That's the whole point. Okay. Yeah, so let's take a look at this yen, and I'll try to answer some of those other questions. Very careful with this one, because this one's just, if you look at the charts, so low here, but we did have this level we found is a very ugly level yesterday. It was actually Sunday. Let me blow this up. We just had a couple levels on top of each other. Because this market was so low on the curve, we kind of combined the two. Okay. All right. William, just a handful of pips above the stop or below, above the level or below the level for the stop. All right. So this one's kind of just sitting up in here, and it's gone pretty deep into this level. I'm not too excited about this trade. I didn't take this one just because the market itself, we're shorting after such a big drop in price, so we've got to be careful. We've got a nice tight target on this, just above, I think it was just above 81.40. I'm not sure, but I'm not in love with that one. So let's move on. Again, there's not a whole lot to do here in this yen. I mean, if you're short this market, great, but until we have a significant demand level that forms, I wouldn't say there's tons of swing trading opportunity on the upside. Okay. What we do have, though, and let me show this to you. Okay. For example, let me do this. Just a second. I'm going to bring up a small time frame chart. Let's try to set up a short, smaller time frame opportunity here. Okay. So I'm going to take you out to the, let's do it here. Let's do it again. Let's get to the futures. Okay, hang on just a second. All right, let's look. Yeah, so just like that euro, right? We saw the larger time frame, but now let's set something up. Let's set up a smaller time frame trade. And unfortunately, I'm going to have to bring you out to this black background chart again. Okay, so now we're looking at the yen futures, all right? And as we can see, we have this level sitting right here, and I'm going to have to go all the way up to the top of this wick. Okay, let's put that line in, and then we'll put one more, and then I'll capture the chart for you. All right, now let me capture it. There you go. Okay, now that's kind of a wide level. We're looking at about 20 ticks there. So the only reason why we have to add that much is because of this big wick to the upside. Okay, But again, notice the drop in price from this area. All right. If I were to put this on a much larger time frame, take a look at that. Now I just move this from a 5-minute chart to a daily chart. Okay, look where we're looking to short in the curve. This is a good spot on the curve to short. It doesn't get much better than that, right? Okay. Remember, you're looking at the futures now, so it's the same market as the spot, just flipped upside down, right? Okay. Whoops, I'm sorry, wrong time frame. I had this on a 10-minute. Here we go. Okay. So if we get a rally back up into that area, or in the spot market, which I can take you to, that's this area right here. So you're either going to short the futures or buy the spot. Same market. Okay. Let me just put these lines in. And here you go. Okay, so here's that same level in the spot. All right. Now remember, this is really, really low on the curve, bigger picture curve, so it's ideal. Notice we had this little kind of pullback here, and prices couldn't even get to that demand level. That's a hint that that's likely to be a pretty good level. Makes sense? Okay. I saw we got really behind on some questions, so let me go back and see if I can answer some of those. Able. So, yeah, what we want to do really is, a couple things. Identify the trend, and then what we're really doing, I mean, at the end of the day, you're finding, you want to identify your fresh supply and demand levels, meaning levels on the chart where prices have not been back to those levels yet. Okay, they're fresh levels. And we want to trade in between those levels. Okay? Think about how you make money in any market. You want to find a market where price is at a level where supply and demand is out of balance in a big way. And all you do is trade that market back to balance. Okay? It's no different than regular business, right? Get into markets where where you have huge profit margins. Once those profit margins shrink up, get out of that and go into something else, right? Okay. Yeah, Wilson, those consolidation levels are going to be targets, absolutely. And if they're fresh levels, be careful. They're probably going to be, price is probably going to turn there, right? And when they're stacked on top of each other, again, the odds are increasing that they're going to turn there, okay? Yeah, so Mano, I see your question there on going through an area. That is most likely to happen when a level is not fresh, when prices have been back to that level a number of times. Okay? Remember, a lot of these things we're talking about now are the odds enhancers that we talk about so often, right? Okay. Well, Rob, no, you wouldn't short the futures and buy the spot, because that'd be the same trade. You're taking on double the risk there. Don't do that. If you do that, just make sure you, in the yen anyway, I should say the yen, because they're not all inverse like that. But if you do that, make sure you cut your position size in half, right? We can take a look at the pound again. Okay, I know someone look at that. Do I use volume? No, I don't use volume really in any markets, and I trade the futures markets more than anything else. A lot of currency futures. I trade lots of currency futures, but I don't use volume there either because I don't know that volume doesn't add to anything that I'm doing or looking for. Okay, it doesn't really add much, if anything. Okay, and if you think about it, you're not gonna, if you're looking for key turning points, you're not going to look for high volume levels. You're going to look for low volume levels, right? Okay. SW1, yeah, I've seen you've asked that question a few times. I'm in the XLT room probably once or twice a week, and that's different XLTs. Sometimes it's the Forex, sometimes it's the futures, sometimes it's the stocks. Okay, but yes, all the XLT instructors. There's 3 Forex XLT instructors, or are constantly showing the trade setups. Absolutely, that's a huge portion of the XLT. Okay. 8130. I don't know about 8130. If you're not interested in this area, I'd probably go lower to the 81 20s. Okay. I saw that other question there. And yeah, so Forex speculator, that's a great question. And make sure you understand that the highest probability levels are going to be the drop-based rally and rally-based drop, not the drop-based drop like you're seeing a minute ago, and the rally-based rally like you see here. Those are not the high odds levels. Okay? The drop-based rally and rally-based drop are the ones that force you out to the extremes. That's why they're better. Okay, does that make sense? Okay. Yeah, James. For short-term trading, I would trade the futures. There's a lot of advantages there over the spot market, right? Okay. There's central exchange. You're trading through the Globex system. Tight spreads. You're not necessarily trading against your broker, right? Your orders being matched up electronically in the Globex system. Okay. Nice price points. Lots of benefits to trade currency futures in the short term. Swing trading and longer term stuff, spot market's great. Okay. Yeah, those are regular Bollinger Band settings. Okay. I'm trying to get to all these questions. Yeah, so Wilson, another thing there, I could explain that further. If it's a level that is fresh, that'd be more of a reversal point. If it's not a fresh level, if it hasn't met all the odds enhancers that we've talked about before, then it's more of then we'd use it as a target, right? Okay. Remember, a level's got to be fresh. It has to have a significant profit margin associated with it. Time at the level's got to be small. All those, if all those things are true, that's an entry point, not a target. Okay, that's the big thing. Okay. Yeah, let me just try to get some of these. Okay. Mayo, there's a lot of, I think there's hopefully a lot of good stuff in the articles and stuff, but obviously we take it deeper in the XLT. If we went over every part of the strategies that we use, that wouldn't be fair to the XLT members. They would start sending me hate mail. We don't want that. Right? Let's go to the pound. Let's take a look. Okay. The pound has turned as well, and let's see where if we can find a buy point in this market. Give me just a second, and let's see if that is actually close. Hang on just a second. I'll pull that chart up for you. Okay, if you look at the chart I have up here now. So it looks like we're down into this area and price should just rocket up, and it certainly can, trade higher from here. But because price has kind of been here already, I'm not that excited about this level. Instead, I'd rather look left and find something maybe a little more fresh. Even on this time frame, it's we're not going to buy into any of this chop. Price has been spent way too much time here, so I wouldn't expect this to be a reversal point. But down here. Again, I don't expect to be here, that quick, but if price does get down here, this is a level you certainly want to key in on today. This week and next week if prices don't get down here right away. Okay, but there's an area right there. Okay, there's one level, and then there's another. That level's right on top of this level here. Okay. So those levels are down below in the 155, 155.50 area. Okay. Again, the pound can certainly turn from here. I'm just not in love with it just because these wicks are so big here. Very sloppy level. We would never take that level in the XLT. Okay. Oh, I'm sorry here. So yeah, we wouldn't be buyers right here in the XLT. However, down here we would. Let me capture the chart again for you. Okay. So those are the levels. As far as any short-term trading opportunities on the short side, let's take a look. And for that, we want to keep it nice and safe and bring you back over to the pound futures. Okay. And what we want to do to identify an area of supply is come down to the smaller time frames. Okay, scroll back and left and identify a couple levels. There's two kind of obvious ones here. There's that one right there. And I'll recapture the chart for you. There's a bunch of brokers that are good to trade futures. A lot of them, TradeStation, Interactive Brokers, Infinity, Global Futures, TP Futures. Okay, so there's the chart. And again, either one of those levels, I'd be looking for at least 2 to 1 on the profit side. I would probably only take that upper level and ignore the bottom level. But if I were really short-term trading, I'd be, that both levels seem fine to me. Selling short at the bottom white line with a protective sell buy stop above the top white line in both of the levels. Okay, that's how the trades are taken. All right, makes sense. Okay. So we found a buying point, an area to buy on the pound, look quite a bit lower, the 55.50 area. And now that we've had this big turn from the big picture supply area, here's an opportunity to get some short-term day trades, potentially, selling to some buyers who would be buying after rallying price and right into this supply. Okay, makes sense. Now, the other thing is, these two levels here are quite a bit nicer than that last one we found because they're so small and short. Okay. Yeah, the yen. So that's what I was comparing this to. So if you take a look at the pound, look at how these two levels are really tight, right? Then if we go back to the JY, the yen. Okay. So this one's into our level, but look at how wide and whippy this area is. It's still probably okay. All right. Okay. But I'm talking about this one. So could be the two. The tight levels are going to be your better ones. Right? See how big and wide and whippy this is? And it's okay. But I think you'll find that the smaller, tighter levels are the ones you want to focus on. Okay. Now let's take a look at this yen that we. Did we just get this? Let's see. So here's that 60-minute yen. Okay. Let me get these charts back to normal. All right. There we go. So the yen is falling from our big picture supply level and now falling right down into this smaller time frame demand level. Okay. Again, this level is not as quality as those two that I just showed you in the British pound or the one in the euro, just because it's a big, wide, and whippy level. It's okay if you're a short-term trader looking for a bounce. It's probably okay, right? And it depends what you're looking for. Stop's be a little too big there. I don't know if the risk reward is there for this one, but prices could bounce from that level. Let's see. SW1 ignoring because of the wick. Are you talking about the wick on top? Okay. Yeah, so we'll keep an eye on that one. All right. All these markets are turning. Equity markets are turning as well. It's good. Oh, the other thing I wanted to point out to you, because I know we're kind of running out of time here, is watch this little area here in the Aussie. Now we've planned out this level up here, which is fine, but watch this little area down here around 9,800. Okay, if you see something stall out there and you're looking for a short little day trade, that might not be a bad idea. Okay, right in there. Okay. Just so you know, too, I just typed my email address into the chat here. If you have any questions, I'm pretty caught up on email. Send me an email. I'll be happy to get back to you if you need anything. Okay. Yeah, Mayo. No, it's everyone in the XLT is pretty much. I wouldn't say we're clones, but we're all doing. It's the same strategy, right? We're buying low, selling high at the appropriate low risk, high reward places. Okay, and we're using real time supply demand analysis to do that. Okay, that's what gets you closest to the turn in price as possible. All right, if that makes sense. Okay. All right. Well, hopefully that was helpful. I know we're out of time here, but anyway, I think we come back and do this again next week. I'm pretty sure. All right, and we'll take a look at how some of these did and what we have going. And yeah, thanks for your time. I know you can spend your time anywhere, so thanks for spending it here at FX Street. And we'll see you next week. Thanks. Have a great day.